Hello, and thank you for tuning into the Home and Finance Show. I'm Diana Rice-Wilkerson, lender with Fairway Independent Mortgage, and joining me is my co-host.
Hello, I'm Janis Bradley, broker-owner of JB Real Estate Consultants.
We are your seasoned professionals, trusted advisors, navigating you through the home buying and home lending process. The show is designed to provide you with current and relevant information about different aspects of home buying, home selling, and also questions with refinancing. You can also hear us on Saturdays at 1310, airing between 1 and 2. That said, if you're in the market to buy, build, or refinance, we'd love to represent you. You may reach us at the contact information below. Now on with the show.
Here we are.
In living color.
Absolutely, absolutely. Well, welcome, listening audience. You know, we have always shared with you that when we have guests, we have the best. So we are just so anxious to let you hear some information about what's going on in the city. So we're going to introduce Stephanie Quick, and she's with N10. And what N10, I don't know everything that N10 stands for. I'm just going to say N10. But basically, they're dealing with home ownership and financing opportunities. So like we said, on with the show. Stephanie, please share the listening audience a little bit about you, and let's get started with N10.
Thank you. Thank you so much for having me. As you mentioned, I'm Stephanie Quick. I'm president at Intend Indiana. And a little bit about Intend. As some folks may know, we were formerly known as Renew Indianapolis. Just a little bit of history in regards to that. In January of 2020, King Park Development Corporation and Renew Indianapolis merged to form Renew Indianapolis. Of course, January 2020, that was just before the pandemic hit. We all more or less came together as two staffs and then went home and barely got to know each other and barely got to have that who we are and what we do conversation with folks. So what we did was we sent out a survey to ask people, what do you know about Renew Indianapolis at that time? And most were only aware of our land bank services.
Okay.
They were not aware that we had actually a total of 4 initiatives. So with that, we said, okay, we should rebrand, take the focus off the name Renew Indianapolis, which is historically tied to the land bank.
Right.
And really promote our 4 initiatives. So that's exactly what we did in last summer. We rebranded to the name Intend Indiana. So Intend is not an acronym, but it's really just to promote that our intentionality, I guess is the best way to describe it, in regards to providing opportunity to those who may not have an opportunity at affordable financing or home ownership.
Question I have, because King Park Development Corporation probably worked within a certain area,
Correct.
Certain footprint. Mm-hmm. Okay, and when you merged with them, did that change?
Yes, actually, King Park Development Corporation, the boundaries for King Park actually expanded before the merger, so probably about, 4 or 5 years before the merger, to serve all of Marion County. Since that time, we've actually increased our geography to be able to serve all of Indiana, hence the name Intend Indiana.
And do you have an office only in Indiana? Only in Indianapolis?
Yes, our office is located in Indianapolis.
Okay, very good.
So share with us some of your home ownership programs.
Absolutely. That's one of our main initiatives, which is known as Affordable Home Matters. And Affordable Home Matters is exactly as it sounds. We truly believe that a place where someone calls home matters, and we want to provide those opportunities for affordable home ownership. So of course we know how robust and just absolutely crazy the real estate market has been for years. So for a low to moderate income buyer, which is our focus, is to provide home ownership opportunities for low to moderate income buyers, it's even more of a challenge, one, to submit a bid, I guess, for a home, and then also to find affordable financing. So with Affordable Home Matters, we rehab homes, and we also do new construction homes for the purpose of home ownership for low to moderate income buyers. Currently, we are working in 2 main focus areas. You may be familiar with the City of Indianapolis Lift Indy Awards, we've received 2 awards through Lift Indy with our partners, one in the Martindale-Brightwood neighborhood. So we're partnering with the Martindale-Brightwood Community Development Corporation, as well as Edna Martin Christian Center for that Martindale-Brightwood Lift Indy initiative. So with that, we as Intend, we're focusing on the housing development aspect, as well as technical assistance, as well as small business lending, which I'll talk about that just a little bit more here in just a minute. But we're contributing a total of 26 homes to the neighborhood.
Okay.
About 10 of those are rehabs, and then the remainder are new construction.
Now, the 26 homes that you're contributing, have those homes already been identified in terms of the rehab homes?
Yes, the rehabs are actually complete with the exception of one. So those have been rehabbed. They've actually been sold to low to moderate income buyers, and now we're concentrating on the new construction.
But I want to clarify the rehab. So the rehab strictly is home ownership. It's not just rehab for current owner occupants, or is it?
It is for new home ownership.
New
Correct.
home ownership.
Yes.
Got you.
Mm-hmm.
Okay. First of all, congratulations. You guys are doing wonderful things.
Thank you.
Now, when it comes to the new homes, talk to us about that plan and where are you with finding homeowners for new homes?
I'm glad you asked that. That's a really good question. So our intent in regards to Martindale-Brightwood Lift Indy was, one, to stabilize the neighborhood, and we assist with stabilizing the neighborhood with our partner Martindale-Brightwood CDC, who provides owner-occupied repair as a part of Lift Indy, and then as Intend, we also provide mortgage lending in regards to both single-family mortgage lending and refinance lending. So as we're looking to stabilize the neighborhood, we definitely wanted those who were residents of the neighborhood, and especially long-term residents of the neighborhood, to be able to remain in their homes and be comfortable and secure in their homes. So we offer our refinance mortgage, which is known as Indy AMP. So Indy AMP is it can be a 10, 20, 30-year mortgage, depending on what the homeowner, I should say, prefers. And it comes with a fixed 3% interest rate. And homeowners are able to roll existing debt into their mortgage. We also have no payments for the first 3 months, with the intent of really allowing homeowners to stay in their homes and really get caught up and get stabilized and some other things that may be occurring in their lives at that point.
So I'm loving this product.
Yes,
so let me
is.
just kind of repeat what I think I heard you say.
I'm glad she's repeating that, as I wanted to.
With the refinance transaction, number one, it is for this neighborhood, Martindale-Brightwood.
It is actually Marion County wide.
So
Okay.
this is Marion County wide also?
Yes.
Okay. And we're talking about the refinance transaction.
Exactly.
Is that correct?
That's right.
Okay, and this is a product where a person can refinance, pay off their current loan, also include other personal debt, including maybe money to make renovations, and walk away with everything pretty much consolidated. And then they get 3 months before their payments kick in.
Yes, so there are no funds for renovation,
Okay.
but you are homeowners are able to roll in existing debt.
Okay.
Again, to make their overall monthly cost a lot more affordable.
So if I am a homeowner and I'm listening to us today, and I hear that, okay, and I know I own a home, and maybe I know I have decent equity, but I also have some debt, particularly if I'm a senior, that is kind of, has me in a financial crunch. You could possibly refinance me, pay off my debt, roll everything into one mortgage with a 3% rate.
That's exactly right.
We're in love.
There are any words. There really aren't any words. So we know in the Martindale-Brightwood area, there's also, like you say, the older community, the senior citizens,
Yes.
those who've been there for quite some time. So did I miss what you're helping them do, or is that something that comes from the CDC?
That comes from the CDC in the
Okay.
form of the owner-occupied repair.
Okay.
The CDC is leading those efforts. So between the owner-occupied repair and the refinance mortgage, those are the efforts that we're putting in place to help stabilize the homeowners in the neighborhood.
Stephanie, how is that word getting out?
We definitely work community engagement with our partners in the Martin and Martindale Brightwood
Right
CDC.
there. Right.
So those are our main sources in regards to getting the information out. We also send out a ton of postcards and flyers to specifically to those homeowners in the neighborhood to make them aware of the refinance mortgage.
Okay, that is great. That is great. Okay, so let's go back to the new construction. So that's not part of the 26.
It is.
Oh, it is. So, or have we started on the new construction?
We have. So there's two new construction initiatives occurring in Martindale Brightwood.
Okay.
The first is what we call Home Power. This is a program that we just started since Lift Indy kicked off, and this is 12 specific homes within about 3 to 4 blocks, where it's a new construction home with an average square footage of about 1,300 to 1,500 square feet, both ranch and 2-story. And this home is attached to our mortgage. So in addition to housing development, we also provide single-family mortgages through our EDGE Fund initiative. So EDGE Fund is a community development financial institution, or CDFI. So that's a Department of Treasury
awesome.
Certification, and it allows us to be a lot more flexible than a traditional bank might be.
Sure.
So with EDGE Fund, with HomeSmart, I should say, the single-family mortgage, that too was geared to provide those opportunities to those low to moderate income home buyers who may not have that opportunity otherwise. So barriers related to credit, barriers related to established credit, things of that nature. We intentionally relaxed our credit criteria. So, for example, the credit score requirement for us is 600.
Right.
The interest rate is a 2% fixed rate for 30 years.
Wow.
Because our loan is not an FHA loan, it's considered a conventional loan.
Right.
There's no private mortgage insurance, and we don't require a down payment with our loans either. We do require that they take a HUD approved home buyer education course. And then we also provide a home ownership course that we call Home Ownership 101 that we offer to everyone in the community, everyone throughout Marion County actually, but we pull a lot for our home buyer pipeline from those who may have attended that course.
That is excellent.
So share with me the price range. I think one time before, because I think, like you said, you have 2 different kind of programs.
We do.
So share with this particular program, please.
Yes. So for Home Power, the price range is $240,000. But we have a partnership with Cummins Foundation where they've come to us and they have a particular interest in the neighborhood and really wanted to lift up black home ownership in this particular neighborhood. So they are providing $90,000 towards the purchase price of the home.
So of each home.
Of each of those homes, related to Home Power. That's right.
Okay.
So with that $240,000 then is reduced to a $150,000 first
that's
mortgage.
the one I wanted you to talk about. That's the one I wanted you to talk about.
Yes.
How exciting.
Let me get deeper. I'm in the weeds. I'm the weeds person.
Yes.
So how many homes are being built using this program?
There's 12 homes.
There's 12. Have these homes been accounted for?
All but 3.
Okay, so there are potentially 3 homeowners
Yes.
out there that could potentially, okay.
Yes.
Who does the approval for the buyer?
So we partner with Merchants Bank of Indiana, and they use our underwriting guidelines that we established. They originate the loans for us, and they do the underwriting.
Okay.
There is the income requirement, so those who are at or below 80% of the area median income. So, for example, a family of one, I believe the annual income is about $47,000.
Okay.
And a family of 2, it's about $62,000, somewhere in there.
Okay.
So long as they meet the income requirements, then they move on to be pre-qualified for a mortgage.
Okay. Okay.
Yes.
And how long is that process? I mean, from the time they apply to the time they know they've got the house, what are we looking at time frame wise?
So from the time that a home buyer submits the complete application information, it's about a 30-day process to get income qualified and mortgage qualified.
Yes.
And then from there, with the Home Power program, then they're able to select from one of the remaining homes as their home. And then we enter into the typical purchase agreement and we move forward from there.
And the homes are built already, or are they going to be built?
So these homes, construction started actually in the spring of last year.
Okay.
So of the 12, 6 are complete,
Yeah.
and the remaining 6 are nearly complete.
process.
Yes.
Fantastic.
But you have three more.
But we have three more.
that actually can still pursue.
Yes.
So, I think I heard you say with this particular program, did you say no money is required from them?
No, there's
did I
no.
miss that?
No, you did not miss that.
Okay,
There's no
'cause,
down
I'm
payment
hard of hearing
required.
in the left ear.
Yeah,
So I guess-
And we don't want her making it up. We do not want her making it up.
So what about their homeowner's insurance?
That's rolled into just like any typical mortgage. That's
Okay.
rolled in there as well as the property taxes. There are of course some closing costs, but those have been minimal. I would say not more than $2,000 to $2,500 for closing costs.
So that they have to bring.
That they do have to bring.
That's what I wanted to
Yes,
get to. Okay.
yes.
So that could be, well, usually with closing costs, that is usually the appraisal or things of this nature.
Yes.
Okay. So now I think I remember this from a conversation we had once before, and I get it. Don't get me wrong. I get it because I am a real estate professional. So the real estate industry is not really part of this. In other words, if I have a customer, because they can't pay out, a realtor and so on and so forth. So I get that. I mean, so I think this.
So you don't pay real estate fees?
And on this particular program,
We do.
is it?
We do
Okay, on
pay a
this one?
commission. Yeah, it is a flat commission.
flat
Okay.
Yes.
Well, what was it? I thought there was a program that you did everything yourself, which I was good with, but I didn't think that the realtors, because I know you list them. You list your properties. Well, did I misunderstand that?
You could be referring to the land bank process, where like ours is a flat fee for home power of about $1,000, $1,500, but with the land bank it's like $100. At
Okay.
least it has been historically.
Oh well, no, we weren't talking about that
Yeah.
one. It's like
Yes.
that's for sure. Okay.
I will add in regards to home power, as I mentioned, it's a $240,000 sale
Yes.
price.
Right.
The $90,000 that comes
subsidy.
from the subsidy, which brings them to the $150,000 first mortgage. Again, that's our mortgage. That's 2% fixed for 30 years. And what they're essentially doing, these homes, they're appraising at or above $240,000 currently.
So instant equity.
Instant
Oh, my
equity. We're
goodness.
looking at least 60% equity at
And
the
a
closing
payment
table.
of $857?
It's about $750.
$750.
Yes.
Yeah, I mean, I don't have a calculator that even goes to 2%. But
Yes,
anyway,
yes.
with no PMI,
Yes.
2%, absolutely outstanding.
Yeah, it
Absolutely.
is.
And what's the plan for next year? I mean, is this in planning? Are you planning to continue this effort year after year after year?
So this was definitely a pilot program with our partners at Cummins Foundation. So we are looking to expand this program throughout Indianapolis, and that's still in the works.
So again, it'll be
Yes.
about funding.
Yes, exactly.
Yeah. Okay.
The CFDI, CDFI, which one?
CDFI.
So CDFI, I remember when that rolled out because I was actually at INHP as their director of mortgage programs.
Yes.
And I want to say this to our audience so that they're aware. So CDFI basically made available for everybody to send proposals into them with ideas on affordable lending.
Yes.
And congratulations for
Thank
that.
you.
So there are a lot of these little like boutique affordable lending initiatives that go on that you're not going to see a lot of advertisement for. So that does make it a little bit of a challenge, but just to know that is a unique situation. That's not something you're going to see everywhere. You almost have to be like on a treasure hunt because it is a treasure.
It is a treasure.
And then they'll watch the performance of these loans. And one of the things I absolutely love about it, having been in lending forever, I've never been a believer because people do know that they need a place to live. And so housing is very important, but I've never believed that you had to have skin in the game per se, a down payment and, all of these things that you hear people say. In order to take care of your home,
Yes.
And so I just want our listening audience to understand. Now, if a person was going to try and keep up with your programs that you're offering, where would they go to find out more?
They would go to intendindiana.org. So that's intendindiana.org.
Okay.
And there's all of our initiatives are listed right on our website.
Okay.
Yes.
Stephanie, I think you mentioned like 2 endeavors that you had. So is there another one besides this one?
Yes, so we also have a Lift Indy Award for the Far East Side. So that's with our
Okay.
partners at Cafe as well as Hope CDC. It's a very similar initiative as with the Martindale Brightwood Lift Indy Award. There's home ownership opportunities as well as owner-occupied repair opportunities. And in both areas, there's wraparound services, so job training, counseling, and things of that nature.
New construction.
On the Far East Side, it's rehab. Because there's literally no, within our boundaries, there's literally no vacant lots to build
on.
To
new.
build on.
Yes.
Okay.
Yes.
Okay.
So these are rehabs, and these are bringing them completely up to code. One thing that we definitely want to make certain of as Intend Indiana is that no matter if it's a rehab or new construction, we want to be certain that our homes are very comparable, and you cannot tell the difference between an affordable home, quote unquote, and a market rate home. So we're replacing the water heaters. If the roof needs to be replaced, we're replacing the roof. We're replacing the furnace. We want that low to moderate income buyer to be able to walk in and not have to worry that in 30 days they're going to have to replace a furnace.
So it's the whole 9 yards,
It
right?
is, yes.
So these 3 homes, because we might possibly have one. When's the completion date? Or are they ready to be sold now?
So these folks can actually get into the pipeline now.
Okay.
And I strongly encourage to get into the pipeline now because there is that income verification
Right.
qualification piece as well as the mortgage qualification. And then from there, then it's just a matter of selecting the home that you would like.
So my question is that I believe you said all of them are pretty much in the same area?
Yes.
Okay. So can you share that particular street or?
Yes, so for Home Power, the homes have been in the 25 and 2400 blocks of Arsenal, Sheldon, Hovey, and then there's some a little further east along Adams Street, which I want to say it's about the 2700 block of Adams Street. So that's Home Power.
Okay.
Yes, and then also as a part of Lift Indy, there's 7 additional new construction homes that are not associated with Home Power, which
Okay.
essentially means that the mortgage is not attached to it and the $90,000 is not attached to it. However, those are home funded with the federal, yes, with the federal grant.
No wonder they made you president.
Yes.
Buckets of money.
Yes.
No wonder they made you president.
Yes, and I know you're familiar with the home process.
Right.
So there's an opportunity for buyer subsidy that could definitely complement what we've done with the Home Power units.
Now, where are those homes? I mean,
Those are for Martindale Brightwood. Those are in the same general area, so
Right.
mainly along.
are they ready to be sold?
No,
Okay,
those have not started construction yet.
And
Actually,
they
That's
will-
the plan.
That's the plan.
Yes, within the next 60 to 90 days, those will start construction.
Okay.
Okay, I was going to say something and I sure don't want to forget it. I think what I was going to say is this is how we do it. That statement, this is how we do it. This is how we do it, guys, when we're talking creating wealth. So someone
Yes.
out there listening
Good
to this
point.
show is familiar with these areas and they're saying $240,000 in that area.
Yes.
And I think we need you on more to talk about what's going on in that area and how this creates wealth. Can we break it down where people truly understand? We only have a couple of minutes, but can you make a comment about that?
Yeah, absolutely. So when we're talking about wealth building, as we mentioned, the $240,000 mortgage, the $90,000 down payment or financial assistance, I should say, which brings us to the $150,000 mortgage. That difference, and you can't, of course, we all know you can't get a mortgage without the home appraising for at least what the loan amount is.
Correct.
So home buyers are walking into that situation with equity of the difference. So that's 60% or more in many situations. So to talk about equity, you have that comfort of knowing, okay, this is something that I'm not upside down on. I can
Right.
eventually give this to my family. I can eventually put my children through college based on the equity that I have in my home.
Right.
So that's that
Savings account,
yes,
correct?
yes, that's that generational wealth building that just keeps giving.
That's right.
Yes.
And the opportunities lie in these areas, which is another reason we're saying, and we say, Janis and I say, if you're looking to sell your house, don't respond to the signs on the pole.
Absolutely.
I mean, call Stephanie. She may buy your home, and we're wanting to make sure that no matter what, we're wanting to make sure you get the best deal possible, even if you're looking to sell. Don't always have a professional. Call these professionals so that they can take great care of you.
Yes.
So the announcement, probably, I don't know if it's been 60 days from the city, for the endeavor for the new homes.
Yes.
Are you a part of that at all?
We are not. That
Okay.
is solely a city initiative.
City initiative, yeah. I went to a meeting on that, and I kind of wondered. I mean, they were looking for propositions, obviously, from probably people like you or what have you, but
Yes.
it looks like you've got your own. That is for sure. I know there was...
Is there one place
question.
where people, and again, I'm acting as though I'm in the audience, where would I go to find out more about the different initiatives around the city or the state? Is there a site yet?
There is not a one
Particular.
site that
Right.
that talks about all of the initiatives. Of course, the city's initiatives are on their
site.
website
Yeah.
with the Department of Metropolitan Development, but there is not, and that is something that should really happen.
Yes. What I would say is Janis Bradley, realtor extraordinaire. She is, one of the things that makes her so unique is she is that person that will do that research. Plus she's got the connections. And I say this really to people because I'm hearing we're speeding it up a little bit and we're looking at moving back into the city because we're beginning to understand this wealth building thing. So hey, you don't have to live there forever. You can live there a year or two, sell it, make money, go somewhere else. But if you are interested in that type of a situation, I would highly encourage you to call Janis, and her information is at the end of the, at the bottom of the picture here, because she will do that research for you.
Absolutely. Stephanie, we can't thank you enough. We could not wait to get you here.
Well, thank you
And we
so
can't
much.
wait to
Thanks
have
for
you on the
having me.
radio show, but you got an hour there. No, you don't. No, you don't. So thank you very much. Enjoy the rest of your day. And listening audience, I hope you're excited. When they say, go tell it on the mountain. So go tell it on the mountain.
But I've got about 22 seconds
Go
left.
ahead.
So
19, 18.
and counting. Yes, as Janis says, thank you very much. We are going to be back in contact. We want to welcome you back. We want to keep our listeners, our viewers, up to date with what's happening. You're statewide, and we need to know it all. Thank
Great.
you again.
Thank you for having me.